Hi viewers and welcome to the channel. My name is Shannon Rifkin. In this week's video we'll be discussing Xero. This is just a chart of the performance of Xero over the last 5 years, which you can see has been pretty incredible, up over 700%, which compares very favorably to the ASX 200 accumulation index, which is up less than 50%. And given the growth of the business, I think it's very easy to understand why that has happened. We did see here at the beginning of the pandemic, it did fall pretty aggressively. Certainly at least partially in line with the market. But as the pandemic, or as COVID became a little bit more easy to understand, or rather also how the economy would respond and which parts of the economy would respond. The business has continued to perform, and and the stock has continued to reach new highs. It also reported its 6-month result just last week, so I thought this would be a good time to cover it. And there was a lot to kind of see in the numbers, which I think explain what a lot of the real value in Xero is as a long-term investment, even from these levels. Even a few years ago, Xero wasn't. I'll rephrase that and say that it took a time for the consensus view of cloud adoption to really take hold. Xero for some time, there were a lot of skeptics out there, but I think the skeptics are now in the rearview mirror, and now it's really like how big the opportunity is ahead of it. And I think almost this last 6 months shows the beautiful potential of these scalable tech businesses. It's a business that typically has grown revenue, grown customers very aggressively, but often without much of a profit behind it. And this has meant a lot of value investors out there have criticized these tech companies and Xero as well, and said that on traditional price earnings multiples, these things are incredibly expensive. But if you kind of dig through the numbers, it's very easy to see why I think that's a superficial analysis. And partially is because while the opportunity remains so large, and while it's still so early in its growth story, it does make sense for these, well, at least in my view, for these companies to spend kind of every spare dollar they have on business development and marketing, and that's what Xero's done. But we've come to a pandemic now where Xero at least has decided for a period of time that they're not going to get the same return on their investment when spending money on marketing, for example. So they've scaled that right back for a period, and what we've seen is profitability actually explode throughout that period. And I should say the consensus estimates for earnings and revenue, I think were well below what it ultimately reported, but it didn't actually necessarily translate to a higher price. And because what Xero said is this is a function of reduced spend on marketing for a period of time, but the goal will be to ramp that up again, to grow our revenue as quickly as possible. And I kind of said for some time that what you want to see out of these tech stocks is that you want to see revenue continue to grow, and that doesn't need to come with a high profit. And ultimately, to some degree, once the profit starts growing, it means that the opportunities for spending on market share gains is not there anymore, and that almost might be the time to sell, in my view. So you do see the incredible growth in its subscriber numbers, which is obviously flowed through to revenue increases as well. Probably the one issue I'll say with the whole Xero story, in my view, is the fact that we're seeing wonderful growth here. 21% in Australia still at this point is amazing. New Zealand a little bit slower, but it's more mature in New Zealand. The United Kingdom is very, very impressive. But you're seeing in North America only 17% increase in customers, and on a low base of only about 251,000, or rather, 251,000 minus 17%. So that what I would say is my main issue with Xero. I think the big opportunity out there is clearly the United Kingdom and North America, where they have got relatively small footprints compared to what they have in Australia and New Zealand. But there's no doubt that for the moment in North America, while growth rates are really good, and while the opportunity still remains great, its main competitor, Intuit, is growing at far better rates. And whether this is just a function of the pandemic and their reduced spend on marketing, or whether this is going to be a bigger issue going forward remains to be seen. I think that's probably, the argument between a bull and bear case right now is where are they going to go in the US. And you can kind of see just the favourable trends in the business, and what we've just seen in this period as well. This customer acquisition cost as a percentage of revenue has gone down because they have cut that marketing spend. But the gross margins of this business are absolutely fantastic. Product costs all really good. So this, all consistent with what I've said about some of these tech businesses, really great scalable businesses, high fixed costs, and once they kind of hit that critical mass, any future revenue is much more profitable than the earlier revenue. Again, more great numbers here, just brilliant gross margins, and you can see exactly what happened to profitability, which absolutely exploded both on a margin level and a net profit after tax or a EBITDA level as well, which was up almost 100%. Anyway, that's it for the analysis. Overall, it's hard not to say that Xero doesn't have a great long-term future ahead. Yes, it's priced for a lot of growth, but I think the opportunity to be, one of the leading global cloud accounting platforms is there, and their products are fantastic. What they've done in Australia and New Zealand, if they can certainly replicate that in some of the bigger markets around the world, there's no reason why Xero can't continue to scale new heights. Anyway, thank you very much for listening. I hope you liked the video. If you did, please don't forget to like and subscribe, and leave any comments, because we'd love to hear your thoughts, and I will come back to you with new videos in the near term.